This is a new segment of our show where I talk about a couple of quick hits, quick ideas that many people are talking about when I go out and have my conversations with investors. First one, contentious capital gains tax appears. We're all talking about the new increase in capital gains tax and how that's going to affect investors' decisions, how that's going to affect small businesses and business folks. Will they take their business elsewhere? Well, for those that have the means to take their business elsewhere, will we see a bit of an exodus from Canada into the United States in places like Florida and Texas, where taxes are a lot less? Tesla AGM. This is a meeting going on where they're going to vote on the pay package for their CEO, Elon Musk. Elon Musk is pushing for a $56 billion pay package. Will he get that? And third quick point or quick hit, Apple talks at their AI Worldwide Developers Conference. Oh, they're talking about AI, I should say, at their Worldwide Developers Conference. We had all their announcements earlier this week on Monday. And as I said, the stock has definitely responded positively. So let's get to the first one, our first quick hit. Contentious capital gains tax appears. We have our first chart on that, which shows that the higher capital gains tax may only affect, or at least so the government says, 0.13% of the population. I'm going to tell you that that is not the case. That yes, there's a very small percentage of the population that make over $250,000 of capital gains every year, which is what the government's saying, and that increase in inclusion rate will only affect those that are making over $250,000 of capital gains. But understand that if you own a corporation and if you're investing in that corporation, if you own a trust and you're investing in that family trust or formal trust, that higher inclusion rate, 66.67%, will affect you as of $1 of capital gains. So it's going to affect a lot more people than just 0.13% of the population. The next chart we have on this, you can see that capital gains is a fairly big chunk of the income by percentile. Dividends being the smallest one. Obviously, wages and other income is first. Capital gains is a very large part. So to me, all this talk that we're hearing out of our federal government that this is it's going to affect a small part of the population. You're hearing some people say, oh, this is just a small, it's not a big deal, it's something small. And then they talk about how it's going to inject $19 billion into the federal government to be able to pay for certain things. So is it small or is it going to inject $19 billion? I think $19 billion is a big number. So I don't think it's as small as people think. And anytime you're raising taxes, to me, that is an issue. That will be an issue for a lot of people. Already, Ontario is the fourth highest jurisdiction, fourth highest taxes jurisdiction anywhere in North America. So this raising capital gains tax inclusion rate, to me, just doesn't make sense. And it may cause many to think twice about starting a business, growing a business, and may think twice about living here in our country. And you may see more and more people moving down south. The second quick hit I wanted to talk about was Tesla. And we have, I believe, the meeting results will be out tomorrow. Elon Musk, in a contract, or at least so that's what we're led to believe, in a previous contract, was expecting to be paid $56 billion. A big number, huge number. It's not like something we see every day. And there's been some pushback from the board, from investors. They don't want to pay Mr. Musk a $56 billion package, especially considering what the stock has done recently. Let's take a look at the chart of Tesla. We've seen this chart of Tesla here. Tesla stock has fallen significantly from its previous highs. Once upon a time, it was $1 trillion company. Now less than half a trillion, or less than 500 billion. So we've seen that Tesla stock has not fared too well, but yet Elon Musk wants to earn what he has been promised. And the board and many investors are pushing back, saying that is not the case. You shouldn't earn that much. Let's restructure your pay package. And we'll see what the results are when they announce those at their meeting tomorrow. One thing I wanted to show just very quickly, top CEO compensation. I thought this was a very a good chart to show. We've seen this was back a little while ago. This is annual compensation 2021, as you can see on the far right. Elon Musk, just a couple of years ago, making over $10 billion a year. We saw the CEO of Rivian, another electric vehicle company, coming in second. Tim Cook, Apple CEO, and then fourth, the CEO of Lucid. So out of the top four highest paid CEOs, three of them were CEOs from electric vehicle companies, which I find quite interesting. And what you don't see here are CEOs there like Amazon, Microsoft, Alphabet. So very interesting to see who are in the top paid CEOs today. Obviously, that may have changed in the last few years, quite possibly has changed. But the fact that Elon Musk, in wanting that $56 billion pay package, it will definitely make him, I believe, the highest paid CEO in the land. The last topic, the last quick hit, obviously all the talk about artificial intelligence and how Apple is going to incorporate artificial intelligence into its products. We have a chart of Apple here. You can see how it blew through its former highs of around $198, $199 a share. Today sitting at over $200 a share. When this chart was taken, up 5, almost 6%, $11 of growth of their share price, which was, I believe, yesterday we took that. And yeah, it's now challenging for the biggest company in the world. Is Apple still a good value today? I'd probably argue that based on its earnings, it is not. Trades well over 30 times forward earnings, yet its growth rate has been somewhere in the vicinity of 5 to 7% year over year. So does that name like Apple with a growth rate that low garner such a high multiple? In my opinion, not. But yet everybody seems to be excited that there's going to be a new refresh of their hardware, of their iPhones, of their iPads, and their Macs. When they incorporate artificial intelligence into their products, everyone's going to have to upgrade and want to buy new products. So maybe the price is justified going forward based on future potential and what will happen with iPhone and Apple in general, what will happen with their sales.